Welcome to Market Mood. Today, we are going to connect the dots between some huge global headlines and, well, your money. We're talking a massive decision brewing in America, China's whole economic drama, the price of oil, the wild ride of crypto. We are breaking it all down for you.
So here's the big question, right? Something happens way over in America, something else is going on in China, and suddenly, boom, the Indian stock market is on a roller coaster. Why is that? How can one decision by the US Fed or a new plan from Donald Trump literally reach out and touch your investments? Okay, let's get into it. And hey, if you're a student or maybe you're just dipping your toes into investing for the first time, don't you worry. We're going to break this whole thing down super simple. The facts, the reasons, and what it all actually means for your portfolio. Ready? Let's go. Okay, our first stop on this world tour is America. Look, you got to understand, America is the biggest player on the field. If its economy is happy and doing well, our market usually dances right along with it. And right now, there are two major stories playing out over there.
The first story is all about the Federal Reserve. The easiest way to think about them is as America's version of our RBI. Their main job, their whole purpose really, is to control interest rates, which basically sets the tempo for the entire economy.
Now, this is where it gets kind of weird and really interesting. Right now in America, private job growth is slowing down. Now, normally you'd think, oh, that's bad news for the economy, and you'd be right. But for the stock market, it's actually seen as good news. Why? Because it puts a ton of pressure on the Fed to cut interest rates to get things moving again.
And the market is absolutely betting the house on this. According to the CME FedWatch tool, there's a 90% chance the Fed is going to cut rates by 0.25% in its big December meeting. So here's the bottom line. If that cut happens, companies can borrow money cheaper, they can invest more in growing their business, and stocks, well, they tend to go up.
Okay, now let's pivot to the second huge story coming out of America, Donald Trump's potential economic game plan. You see, if he becomes president again on January 20th, 2025, his agenda could seriously shake things up in the markets.
So his plan, really, boils down to three main steps. First, he wants to slap a huge tariff. We're talking up to 60% on all goods coming in from China. That's a potential trade war right there. Second, push American companies to bring their factories and manufacturing back home. And the goal of all this? Step 3, boost American jobs and the American economy.
So what would this actually do to stocks? Well, it's a mixed bag. Companies focused on the US, like Tesla and Amazon, could get a nice boost. But big retailers like Walmart that rely heavily on cheap imports from China, their stocks could take a hit. And for global giants like Apple and Nike, it could throw a massive wrench into their supply chains.
All right, let's pack our bags and head over to the world's other economic superpower, China. And to be honest, China's economy is not feeling well right now. You could almost say it's in the ICU, but the government is about to give it some very, very strong medicine to try and bring it back to life.
So what are the symptoms of this sickness? Well, for starters, the property market is in a full-blown crisis, with massive companies like Evergrande going under. Factory output has slowed down, exports are falling, and there's this really dangerous risk of something called deflation. That means prices are actually falling, which sounds good, but it's terrible for an economy, because everyone just waits to buy stuff hoping it'll get even cheaper.
So, what's the cure? The Chinese government has just unleashed an absolutely enormous stimulus package. We're talking the equivalent of over 10 lakh crore rupees. The whole idea is to pump this cash into the system, jumpstart the economy, and hopefully hit their 5% growth target for 2026.
And here is exactly why you should care about this. If China's big plan works and their construction and factories start roaring back to life, they are going to need a ton of raw materials. We're talking steel, copper, you name it. And that could be a huge boost for our own commodity giants here in India, like Tata Steel and Vedanta.
Okay, time for a quick rapid-fire round. Let's look at three other key things that are making big waves in the global market right now: oil, gold, and of course, crypto. First up, crude oil. Right now, it's sitting at around $60 a barrel. That is a massive drop from its high of $90 earlier this year. And for a country like India, which imports most of its oil, this is fantastic news. It helps keep inflation down, and it slashes fuel costs for airlines like Indigo, which is great for their profits.
Next up, gold. It is soaring, hitting a record high of $4,200 an ounce. You see, whenever there's a lot of fear or uncertainty in the world, kind of like right now, investors run to gold. They see it as a safe haven, a reliable place to park their money and protect their wealth.
And finally, the wild one, Bitcoin. It has absolutely blasted past the $92,000 mark for a single coin. Having big names like Donald Trump publicly support it has definitely helped fuel this crazy rally. But, and this is a big but, always remember, an asset that shoots up this fast can come crashing down just as quickly, so you gotta be careful.
So, after touring America's interest rate drama, China's massive stimulus plan, and all these crazy commodities, what does it all actually mean for us, right here in India? Let's bring it all home and look at the real-world impact.
While the Indian market has been on a tear, the Sensex is trading above 85,000 and the Nifty has shot past 26,000. A huge reason for this optimism is the growing belief that once the US Fed cuts its rates, our own RBI is going to follow right behind them.
And here's another really great sign. Foreign institutional investors, we call them FIIs, are coming back. After pulling more than $17 billion out of the Indian market, they are now putting that money back in, and in a big way. That shows they have real confidence in where the Indian economy is headed.
So, what's the forecast look like from here? Well, a lot of experts think this good vibe is going to continue. Some are even predicting that the Nifty could cross that 26,300 mark as soon as next week.
So, after all that, what is the one big idea you should walk away with? It's actually pretty simple. What happens out there in the world? A policy change in Washington, a stimulus plan in Beijing, a shift in the Middle East, it has a direct and pretty much immediate impact on your money. That's why staying in the loop isn't just for fun, it's absolutely essential.
And now I want to turn it over to you. Looking at everything that's going on in the world, what's your game plan? Are you leaning into that high-risk, high-reward world of crypto, or are you sticking with the more traditional growth of stocks? Let me know what you're thinking down in the comments. I'll see you in the next explainer.